Most people believe a huge lie. I'll start investing when I have more money. But here's the truth. You don't need thousands of dollars to start investing. You just need the right mindset and a simple, effective plan. In this video, I'm going to show you exactly how to start investing with just $100, even if you're a complete beginner with zero experience. So stick around, because this is the guide you've been waiting for. Let's get one thing straight right away. The amount you start with is not important. What truly matters are three things: consistency, time, and discipline. Think about it this way. Waiting to save up a big amount is far more expensive than just starting small. Today. Why? Because you lose out on precious time in the market, which is your most valuable asset. Investing is a habit. It's like going to the gym. You don't start by trying to lift the heaviest weights. You start with what you can handle, and you show up consistently. Once that habit is built, the results, in this case, the money, will naturally follow. Building the habit of putting money aside and investing it, no matter how small the amount, is the real secret. That's the foundation for long-term wealth. Now for the first and maybe most important rule of investing. Do not try to get rich fast. This is the single biggest trap for beginners. They come into the market thinking they've found a shortcut to wealth. They start chasing after hot stocks they heard about from a friend. They look for online tips promising guaranteed profits, or they get lured in by some new can't-miss opportunity. This is a recipe for disaster. Smart, successful investors don't gamble. They focus on steady, long-term growth, not on quick, flashy wins. Remember, the stock market is not a casino. Slow and steady investing, based on proven principles, beats risky shortcuts every single time. Your goal isn't to hit a home run on your first try. It's to stay in the game and win over the long haul. So if you're not chasing hot stocks, where exactly should you invest your first $100? For beginners, the answer is simple. Keep it simple. Your best options are things like index funds or ETFs, which are exchange-traded funds. Think of them as a basket that holds tiny pieces of hundreds or even thousands of different companies. When you buy a share of an S&P 500 ETF, for example, you instantly own a small slice of the 500 largest companies in the US. This gives you broad market exposure and automatic diversification. Another great option is fractional shares. This lets you buy a small piece of a big, expensive company. Want to own a piece of Apple or Amazon but don't have thousands for a single share? With fractional shares, you can buy $10 or $50 worth. You don't need to be a genius stock picker. You just need to own a piece of the market and let it grow over time. This approach reduces your risk and, just as importantly, reduces your stress. Alright, let's break down the exact step-by-step process. First, you need to open a beginner-friendly investing account. There are tons of great apps and online brokerages out there that have no minimum deposit and are super easy to use. I'll link a few of my favorites in the description. Second, once your account is open, start with a broad market ETF, like one that tracks the S&P 500 or the total stock market. This is your foundation. Third, commit to investing the same amount of money every single month. This is called dollar cost averaging. Whether it's $100, $50, or even $20, make it automatic. Fourth, when your investments generate dividends or profits, reinvest them. This kicks compounding into high gear. And finally, the hardest part, ignore the daily market noise. The market will go up, it will go down. Don't check your portfolio every 5 minutes. This simple, automated strategy works because it removes emotion from the equation, which is often an investor's worst enemy. As a beginner, you're bound to make a few mistakes, but you can avoid the most common ones. The biggest mistake is checking your portfolio's value every single day. This just creates anxiety and leads to emotional decisions. Another huge error is panic selling during a market drop. Market downturns are normal. They are a feature, not a bug. If you sell when prices are low, you're just locking in your losses. Also, never invest money that you might need in the short term, say within the next 1, 2, 3 years. That money should be in a savings account. And finally, please do not just copy investment tips you see on social media without doing your own research. The market rewards patience and discipline, not frantic activity. Let's talk about the real magic here. The power of consistency. Investing $100 just one time isn't going to change your life. Let's be honest about that. But investing $100 every single month consistently over many years, that absolutely can change your life. This is where the three pillars of wealth come together: time, consistency, and the power of compound interest. Compounding is when your investment earnings start generating their own earnings. It's like a snowball rolling down a hill, getting bigger and bigger over time. Your job isn't to create the snowball overnight. Your job is to start small, stay consistent, and let time do all the heavy lifting for you. That's how real, sustainable wealth is built. So let's wrap this up. You do not need to be rich to start investing. In fact, it's the other way around. You need to start investing to build wealth over time. The journey of 1,000 miles begins with a single step, and your investing journey can begin today with just $100. The key is to start, stay consistent, and be patient. If you want more simple, honest guidance on investing, business, and money, make sure to subscribe. Thanks for watching.